The stock market is on fire. But is that really a good thing? That's what we're going to be talking about right here in the video, so let's get right into it. All right, now maybe you've seen this in the headlines, maybe you've heard it on your local news, or maybe you're somebody that follows the stock market as closely as I do. But you know that lately, the stock market has been on an absolute tear, going up several percentage points each and every day. Well, as of recently, over the last week or so, we've been getting some pretty encouraging economic data that has been released, suggesting that things are really good right now. Well, yes, the economic data that has been released is actually looking pretty good, but is that the best thing for the stock market? Well, that's what I want to talk about here in this video because it may not be the best thing in the world, and that's what I want to explain in further detail. So let's get into this. However, really fast before we do, if you're interested in grabbing some free stocks, make sure to check out the link down below in the description because they are now giving away some free stocks when you open up a new account and deposit any dollar amount, including 1 single penny. So check out that link down below in the description. However, now let's quickly talk about what is going on here with the stock market and this economic data that has been released as of recently. In fact, let's quickly talk about the last jobs report that was just released the other day, which showed the United States economy added 517,000 jobs in January. That's a huge number considering the consensus was coming in where analysts were anticipating the economy to add 183,000 jobs. It blew those numbers away, right? So the consensus was 183 and it came in at 517. How could they be so wrong, right? Now, another big question is, are these numbers even accurate or are they possibly fudging the numbers a little bit? Well, that's everybody else's opinion at this point. We don't need to go down that rabbit hole at this time, but we've also known with some of these economic numbers over the past that they're not always that accurate at the same time, right? But either way, let's just run with the numbers here. Now, this is actually showing that the unemployment rate as well in this country went down to 3.4% as a result of this, and this is the lowest unemployment rate that we've seen since 1969. Again, looks all rosy and peachy, right? Like, wow, things are great here. Things are looking up in this country, and it's always a good thing, right? But at the same time, you also know as well, if you've been watching the stock market for a while, or if you've been watching this economic data for a while, sometimes good news is bad news. Well, that's the type of situation that we're looking at right now. Now, also, just a few days ago, we did get the report and the announcement out of the Federal Reserve, as in they wrapped up their 2-day FOMC meeting and they raised interest rates by another 25 basis points. Now, this is the smallest interest rate hike that they've had since March of last year. So almost a year ago was the last time that they raised interest rates at 25 basis points like they did here. Through the vast majority of 2022, they raised interest rates 50 basis points and even 4 consecutive back-to-back 75 basis point rate hikes all in a row there, and then they ended the year with a 50 basis point rate hike, and now they're down to 25 basis points. However, just remember this much. They had the FOMC meeting a couple days before the last jobs report that was released just the other day. Okay, well, what does this all mean? It simply means that the Federal Reserve did not have the final data on the jobs report by the time that they had their FOMC meeting. Now, here's the thing. What's going on right now, and why is this good news with the jobs report possibly bad news? Here's what it comes down to. The Federal Reserve wants things to slow down in this country. Why? Because inflation is still very high. Remember, their whole point with the Federal Reserve is to bring inflation back down to their benchmark of 2 to 2.5%. We're currently sitting at about 6.5% right now. So they have about 4 percentage points to go to bring this inflation back down to where they want it to be. But let me ask you this really quickly, just to digress for a second here. Have you seen inflation come down in your local area? Wherever you're shopping, the things that you're buying, food, shelter, clothing, whatever it happens to be, have you seen prices come down? I'm going to go ahead and say probably not, okay? I'm not sure where you're shopping, but the same old boring things that we buy every single week have continued to go up in price. That's just what we're currently experiencing. But maybe it's isolated to just my neighborhood. I don't think so, but maybe I'm wrong with that. Anyway, let me know down below if prices are still rising in your local area with the things that you're buying. Anyway, so now when we look at this, we can clearly look at, okay, the objective of the Federal Reserve is to bring this inflation down. At the same time, we continue to see that the job market appears, according to these numbers, to be very, very strong. Now, is this a good thing or bad thing? Well, in the eyes of the Federal Reserve, it's not exactly the best thing in the world because when we have all these jobs being created like this, it's ultimately not necessarily a good thing when it comes to inflation, because it simply means that consumers have more purchasing power. It simply means that consumers, as in employees, when they go out to find a job, they ultimately have negotiating power to virtually say, hey, I want more money. If there's that many employers out there that are apparently hiring for right now, they're basically looking for anybody that'll fill a position, and they're going to do just about anything it takes to get those positions filled, right? So if somebody comes in and says, I see that you're hiring here and you are willing to pay, say, $25 an hour, for example. Somebody might come in and say, I want the position. I'm willing to take this. I've seen that it's been open for 3 months. You've had this job posted, but you know what? I need $32 an hour. They might say, we can't do 32, but we can do $30 an hour, whatever. I'm just using this as an example. My point is, employees have major leverage right now to get the money that they want, which ultimately gives more purchasing power, right? So that employee, that person now has more money that they can go out into the economy with and spend, therefore driving inflation even more, right? So ultimately, at the end of the day, what does the Federal Reserve really want? Now, again, they have not exactly said these words, but they have alluded to this many times here over the last several months, which is, it's going to be painful. We're going to lose a bunch of jobs, and the economy is going to slow down. They continue to tell us this over and over. So even though we just got a 25 basis point rate hike a couple days ago out of the Federal Reserve, this almost feels like it's likely going to kind of set the stage for the next FOMC meeting to possibly raise yet again even more than that. Now, the consensus as of right now is that yet again they will raise interest rates. The big question is going to be, is it going to be 25 basis points, or is it going to be another 50 basis points like what we saw at the end of last year? Now, their next FOMC meeting is in late March, so we still have a few weeks to go. These FOMC meetings are spaced out 6 weeks apart, so the next one is coming in in late March. But the big question is going to be, between now and then, we're going to be getting 2 more inflation reports. One in mid-February, the next one in mid-March is when we're going to be getting the 2 inflation reports, and we will be getting one more jobs report as well in early March for February as well, to see what's going on here. So we have a lot of data points that we still need to digest between now and then that will be announced. This is going to set the stage for what the Federal Reserve does in late March with their next FOMC meeting. So the whole point is, when it comes down to it, when we look at these economic data points that are being released right now, and we're looking at everything that's going on, yes, the economic data looks good, but it's not necessarily a good thing when it comes down to the stock market and the Federal Reserve, because they're looking at this saying, the economy and the economic data is still too strong. We got to bring it down. So again, the Federal Reserve might get more aggressive yet again, raising interest rates, because they want this to come down. This good news out of the economy is not good news for the Federal Reserve. That's not what they want, right? They're not looking for this, because this is just driving inflation even more. Now, a couple other things I want to point out as well. There's been a number of big names coming out, a number of big banks and large institutions coming out right now suggesting this major rally in the stock market right now is literally just a huge bear trap. I mean, they're coming out left and right now. People are saying, watch out, investors. If you're buying right now, you're literally buying right into a bear trap. There's also other people that are coming out suggesting investors that are buying right now are literally sleepwalking right into a disaster. And we even have people like Michael Burry, who was out the other day, suggesting, and he was tweeting, this is basically just a huge sell signal. So he was even coming out saying, this is an ominous signal right now that there is so much buying pressure coming into this market. This is just a huge opportunity to sell positions and get out before the next leg of this market comes down. Another thing that I want to point out as well, I've been seeing this in the headlines as well, which is the Golden Cross. Oh my, watch out, the Golden Cross, and this is going to be really good for stocks, which, by the way, the Golden Cross is just 2 moving averages crossing each other. Who cares? They're lagging information. Moving averages are lagging. It's not a leading indicator by any means at all. Well, obviously, if one moving average is moving down because it's a longer term moving average, and then a shorter term moving average is moving up because prices are moving up very aggressively, obviously they're going to cross, and that's what they're calling the Golden Cross. Just like what we hear on the downside, the Death Cross. The Death Cross, right? Well, again, remember this much as well. what do large institutions need to do in the event of a big stock market rally or a huge drop in the market? What do? They have to come out and say things like the golden cross. It's a buying signal, everyone, right? So why do they come out and say these things? They need to create counterparty, right? Because remember this much as well. Institutions have millions and millions of shares. They have billions of dollars that they're working with. They need to create counterparty so they can take the other side of the trade, right? They need to get somebody else to buy their position, or they need to sell to somebody, who's buying it, right? So how do they do that? They come on TV and say, it's a great opportunity to buy. You know what I mean? And then they create that counterparty where they can unload their positions. Just saying, you got to kind of read between the lines here, because this is what really goes on. So my point is, the good news that's coming out right now on the stock market, or the great stock market rally, may just be a major bear trap. But again, we won't really know that until the whole thing plays out. And again, all this good news that's coming out of the economy right now with this economic data may not be the best thing in the world. We got to look at this sometimes, because sometimes in the economy, and sometimes when it pertains to stocks, good news is bad news, and sometimes bad news is good news. Depends on the situation that we're sitting in. And right now, unfortunately, good news is bad news. And that's what it comes down to. Either way, I hope this helps to better understand a little bit more of what's going on right now. Again, make sure to check out that link down below in the description. If you use that link and you sign up, you can get those free stocks. And again, you can deposit any amount. You can deposit a penny, you can deposit 5 cents, you can deposit $5, doesn't matter. But you get free stocks when you sign up and you use that link. So pretty cool stuff right there. Which, by the way, when I signed up and I got that, I got a free share of Starbucks along with a bunch of other stuff. By the time, or when I got that share, the share of Starbucks was like $83. So pretty cool stuff. I was super jacked up and super excited when I got that, right? It was pretty cool stuff. Anyway, feel free to check out that down below, which, by the way, this video is not investing advice in any way, shape, or form. I don't know your situation, and I certainly am not going to advise you in a video like this, because it's different for everybody. But again, I want to give you some general information so you can see what is really going on here and get a better understanding of the stock market, as well as the economic data that's coming out right now and what it may mean for you and your money and all this other information coming out. Either way, I'm here for you in any way that I can be. So please make sure to subscribe down below, share the video with your friends, family, social media, and go back and check out any of the other thousands of videos here on the channel. Until next time, enjoy your day, and catch you again later in the next video.